What's up, my fellow Harmonic traders? Welcome back to Track the Harmonic, your go-to destination for all things harmonic technical analysis. I'm your host, Lord MC. In today's video, we're going to cover some exciting harmonic technical analysis and also take a look at the key economic data that is set to be released next week. We're going to break down what these numbers mean for the markets and how we can use harmonic patterns to potentially spot out reversals within the market. So we're going to examine the latest harmonic patterns that are forming in the markets here and what they could potentially mean going forward. Next up, we're also going to be talking about the major economic data that is set to be released this week. So here's what you need to know. First thing, we do have the durable good orders. So the durable good orders report, this is just the new orders that are placed with manufacturers for long-lasting goods. This data gives us insight into manufacturing activity and overall economic health. So an increase in orders suggests economic expansion, while a decrease could signal a slowdown. This week, we also have GDP, better known as a gross domestic product. This is the broadest measure of economic activity, and it represents the total value of goods and services produced over a specific time period. It's a key indicator of economic performance. A strong GDP growth indicates a healthy economy, while a weak growth can raise some concerns. So we also have PCE. This is what the Fed is going to be looking at, better known as the personal consumption expenditures. The PCE index measures changes in the prices of goods and services consumed by individuals. It's a crucial indicator of inflation and consumer spending habits. So rising PCE indicates increased inflation, which can impact interest rates and monetary policy. Last but not least, we also have personal income. So personal income data shows the total income received by individuals, including wages and salaries. This report helps us understand consumer spending power and overall economic well-being. So higher personal income often leads to increased consumer spending, which drives economic growth. So this also ties in with PCE. So it's going to be very important what that data is going to show. So if you find this content helpful, don't forget to hit that like button, subscribe to the channel, and ring that bell to stay updated with future videos. Also, drop a comment below with your thoughts and predictions for the upcoming week. I also want to preface by saying I am not a financial advisor, and none of the things I say in my videos or anywhere else is ever financial advice, so question everything, do your own research, and come out with your own conclusions. Having said that, let's jump right into those charts. First up, we have the SPY here. We're going to be looking at the daily as well as the weekly time frames here. We'll see how we close for the week. I also want to remind you guys and mention that this week we just had was a very short week with only 4 days of trading. So if you're looking at volume to price analysis, you just have to take that into consideration. And whether you're tying this analysis as a short week with low volume, you have to take into consideration that we had only 4 days of trading this week. So right here, first we have the ABCD pattern on SPY. This is a bearish harmonic pattern where you could see that it's still holding above HOP. And on Friday's close, we finished with an indecision candle here with an HSI arrow triggered. This is HSI arrows triggered by the HSI harmonic indicator. As I bring on my drawings here, what can we expect here? I know there's a lot of lines, but bear with me. So I'm looking to see if that indecision candle is going to actually mean a reversal or consolidation, right? We do have PCE, which is the big economic data that's going to be set to be released this week. So we could be trading just sideways up chop here, maybe between 541 and 540 in the highs there, 550 to figure out if the data is going to be bullish. If it is, and you can break to make higher highs, there is a harmonic target on the weekly calling for SPY at 555. And if the data is bearish, maybe you could see some levels to the downside here. So the next level I'd be looking at for HOP, for the SPY, if it's going to retrace here, is to lose HOP at 541.04. If you could lose that level there, right where the 13 EMA is at, then you would enter that gap there potentially, and then fill the gap there, which is around 537.01. And then you have the ABCD target there at 535.61. If you lose that level, then I'd be looking at the 50 EMA here on the daily, which is 526. And then I have a harmonic target at 520.54, which you could find support like you did back here. So right now, the 21 EMA on the daily has been holding support for SPY here. So you could just retrace here and then make a higher high. We have to wait and figure out what the data is going to show. But as you could tell here, that indecision candle with the HSI arrow triggered by the HSI being in the overbought extreme conditions, as well as the RSI and the AMP RSI all coming down here to cool off a bit. So maybe you do retrace here, which we have to wait and see for the data, maybe, or you could just trade sideways. And right now, as you could tell, the indicators here, the oscillators have reset, so they could just find support here, especially the HSI off that midline, which could be anywhere between where HOP is at and maybe that gap fill or ABCD. So on the weekly here, SPY has a similar setup as a daily with the bearish ABCD pattern. As you can tell, this pattern was generated back in late May, and it didn't really reverse back down to test target 1 for that type 1 reaction, and instead it started to climb up towards that HOP for type 2 return. So that HOP target is at 555.17, like I said. So what are we looking at here on the weekly? As you could tell, while it did increase on a short week, but you also have to take into consideration that this week was OPEC, so they may have closed all those contracts out or even rolled them over. So They're definitely volume picked up because of that as well. So if we're looking at the oscillators with the HSI crossing the midline, it looks like it wants to test that hop level based off of maybe if we do get bullish data, that level does get hit or higher, because the HSI still got room to these overbought conditions, which could be above hop if it's really bullish. So one thing I want to note that this week we did close on an inverted hammer candle. So that inverted hammer candle is by definition a reversal. So if this is going to play to the downside, you want to see this week come with selling pressure with an increase in volume. In my opinion here, I'm looking at this inverted hammer candle because it appeared in the uptrend. I do think it's a bullish continuation with increased volume. So in my opinion, I do think if the data is bullish, you will see potential target there at 555. And if you don't, you have that reversal candle will finally suggest a little pullback back down. This is on the weekly. Obviously, this is going to take a little time to play out for 531. You lose that level. One of the key levels I'd be looking at here for a SPY on the weekly is that 21 EMA, as it tends to find support here. The last time you came back down here, where you did lose at the 9 EMA, you came down here for a almost 6% retracement but found support. So if SPY does the same thing, maybe it repeats the same thing and then creates a higher high, depending on how bearish the data is. If it's not that bearish, then maybe you just see it retest some levels before it makes a higher high. I would be paying attention very closely to when that actually loses a 21 EMA, because if it loses a 21 EMA, it could come and test like how it did back here in October, and that could be all the way to 479, and then maybe you see the type 1 reaction down the line. Obviously, this is on the weekly, so this could take some time to play out, but definitely keep a close eye out on the SPY. Jumping over to the triple Qs here. So the triple Qs yet to have a harmonic forming on the daily here. So we're going to be talking more so in terms of volume to price analysis, as well as any information here that potentially signaling that a reversal is coming. But right now on the daily, I want to bring your attention to what happened on Thursday, because we did trigger that HSI arrow to the downside off increase in volume, and you also had follow through with increase in volume on Friday, which you closed with that indecision candle. So right now we are looking at the RSI still in overbought conditions, the HSI approaching that midline. So if it approaches that midline, you could see maybe the Qs come down to test 477. If it finds support there, then you maybe create a higher high. If we go over to the weekly here real quick, let's bring up my drawings. The weekly has this bearish shark pattern where you can see that it's already way above hop. We had 1, 2, 3, 4, 5 weeks now above hop, increase in volume on the weekly with that inverted hammer candle. So is this going to be a reversal candle? We obviously have to wait and see. I do have a target there at 504.16. So that's the next target I have for the triple Qs if data is bullish. So that 504.16 target is by taking the Fibonacci retracement level from point D here, where the previous all-time high back in November 2021 to the recent October lows there. That is the actual 1618 of that move. So if that's the next level I have. Obviously there's a psychological level for the triple Qs at 500, but above that then I do see 504.16. Right now the RSI is a bit overbought on the weekly. As you can tell, the HSI wants to go to the overbought conditions, so the weekly more long term is suggesting potential upside, while the daily could be suggesting that a little retracement maybe is coming back down. Maybe you do chop it up, maybe you have durable good orders, or GDP be a little bearish with PCE, find some support there, and then you continue pushing higher based off of data. But obviously we're going to have to wait to see what the data shows, but definitely keep a close eye on the triple Qs. Jumping over to the Dow Jones here. So the Dow Jones currently, we're still looking at the black swan. When the pattern was created, it came up above PT2. It got as high as 401. Didn't really hit that PT3 target. You came back down, lost PT1, but is now coming back up to retest a line that I have. The very important line is at 392.04. As you can tell here, a couple of resistance levels here. You had some resistance back here in March, and then you finally broke out of here in March, late March, to that almost $400 target. You had found some support there, then you came back down, and then obviously during this breakout here in May, you came to test 401. So right now you are trying to break above 392. So if that breakout happens, I do see this potentially tracing back up to the potential $400 target and making maybe coming up here to make a higher high to finally finish that swan pattern at PT3. If you do have some resistance here, the next level I'd be looking at here for the Dow Jones is at 390.16. Below that, you have some support here up to the 50 around the $387 target. Lose that level and then you see 384. And then I do have a line down here around 379, call it 380. Losing that, then you can get a little bit more bearish, and you can see 376 with 200 EMA at 374, and then maybe OPR for the type 2 return. If we go over here to the weekly, we do have a bearish ABCD pattern. As you can tell, it is trying to reclaim back above 392, and if you get a break above ABCD there at 394.17, you could see a potential new all-time high for the Dow Jones at 408.76 down the line. So if you find some resistance, the next level I'd be looking at to the downside for the Dow Jones on the weekly is that 21 EMA. That 21 EMA has been respected. It's at 385.39 right now. As you could tell, all these wicks down here that tested below the 21 EMA, it recovered, had some absorption, and then pushed for a higher high. So volume right now relatively low on the weekly, so it's going to be very important to see if that holds. One thing I do want to mention is that on the daily here, it is forming a bearish flag. You just draw this out real quick here. So this is a bearish flag. This is the flag pull, and this is actually the flag. So if this actually comes down here and loses that flag, then you could start seeing that type 2 return to potentially OPR. And if you invalidate that flag as well, you definitely want to take a fib retracement here and figure out what that level is to get a little bit more bullish. As you can tell right now, it's knocking at the door at the 618. In my opinion, if you can break that 393.15, you start shifting that momentum back more bullish for a continuation to make higher highs and higher lows. So definitely keep a close eye out on the Dow Jones. Jumping over to IWM here. So IWM does not have a current harmonic target. Yes, it does have a bearish dragon pattern. As you can tell, it came up here to test OPR, had some resistance there at a double top, and it has yet to come down here for any of the price PT1 targets. So this pattern is about being validated, but you can still look at these levels for support and resistance. One thing I want to mention, that Friday's volume was increased volume pressure here. You haven't seen that volume come in since mid-May there, May the 17th. This did finish off Friday with a hammer candle, so that is a reversal candle to the upside. This isn't a current downtrend, but one thing I'm looking at is in this channel here, this channel is creating lower lows up here and lower highs. So is this actually going to come and create a lower low, maybe to trap some bears here in case the data is bullish for the week? You can come back down to retest maybe that 198, 197 target, and even come down here to test potentially the 200 EMA where you found support here. So this could be a double bottom incoming, right? I know this is IWM is kind of a hard read. It's been trying to maintain above 200. It has lost the 200 level, but it is holding around the $200 range. You could argue that this is also an M formation right here. This is also known as the double top here. But if this comes down over here to test the 200 EMA, that would form a W formation, which would be a double bottom. Obviously, it's a hard read right now to figure out whether if it's going to be a double top again or it's actually going to come down here for a double bottom. If we go look for the weekly here, the weekly finding some resistance at the 9 EMA, and specifically at my target that I have at 201.99. You did have the selling pressure here increase, and Friday's volume also was on decrease to the buy side. So like I said, you have this M formation right here potentially to just test that 200 SMA. That's at the 195 level where the 200 EMA is at on the daily. You could find support like you did back here, and then maybe create a higher high breakout of 202 if data is bullish. But right now, a little bit hard read for IWM, and it is trying to consolidate and stay above at least minimum 195. As you could tell here, when it tested the 200 EMA, it held support, and it just started to push up here within that 195 range to 200, and looks like a 210 range right here where it got resistance. So you could just see here from the pattern where it was created here, the dragon pattern, you just hover there around that. So you did hover around here in early Feb here around the 50 EMA, which is around the 191 target, and where you came tested the 200 EMA here in mid-April, you also test that around 191. So right now, even if it comes down to below 195, 191 has been holding support pretty well here for IWM. Every time it comes to 191, you come and test 210. You came down here at 199, back to 210. You came to 191 here, back up to 210. So if you find support at 200 EMA, maybe that's where you find support, and then make a higher high and finally break out of here. So it's going to be very important to see what IWM is going to do from here, because it is finding support here. You could also argue that this looks like a little wonky inverse head and shoulders, even though the left shoulder, the right shoulder came down below the left shoulder. It's in my opinion invalidated, but it looks like a inverse head and shoulders, depending if you want to interpret that as a head and shoulders if it broke down below the left shoulder. But right now we're going to be looking at IWM, because in my opinion, if this breaks below 200, you can start looking for a run up to that 210, and then maybe capital rotation here into IWM, as some of the tech sector could be cooling off, and then maybe you could see IWM and the mid-cap stocks move. So definitely keep a close eye out on IWM. Jumping over to XLF here, the financial sector, We are currently looking at the bearish dragon pattern on the daily. As you can tell, when it completed the pattern here, you came down and lost BC. It came all the way down to $40. Still have not tested CD there. We still have a ways to go for that to happen. But you did find some support here. You did retrace up here. You almost test that 4170 target. But on Friday, you kind of matched that with volume pressure to the downside and what looks like a potential hanging man there on the daily. So that is a reversal candle. We're going to see if this actually is a bearish reversal candle back to test some levels here to the downside, where it looks like right now you just created a lower high. So if it does reject here, you might come back for a lower low down the line. And that lower low below that, losing that 50 EMA, you can see it retest that bottom there at 40.36. Below that, then I'd be looking at 39.93, and then you can see CD there at 38.72, roughly where the 200 EMA is at. If you are able to find support here and reclaim 41.70, the next level I'd be looking at would be to hold support above BC there at 41.91, and then finally test their OPR at 42.95, which would be a new all-time high. If we go over to the weekly, we do have the bearish shark pattern. As you could tell, the 21 EMA has held support where the terminal bar is at $40.47. Like I said, a break above 41.70. That'll be looking on the weekly for a longer term time frame here at 1.13 of the shark pattern, which is 42.92. Above that, then you have 44.59 at hop. So if you lose that level of the terminal bar, the next level down the line, I'll be looking at the 50 EMA at 38. And then you can maybe see the type 1 reaction to test target 1 at 35.91 down the line. So definitely keep a close eye out on the financial sector. Jumping over to XLE here. So the energy sector still has this bearish shark pattern on the daily. As you can tell, this is still in a downwards channel, creating lower lows and lower highs. You did get some resistance there at the 21 EMA on Thursday and Friday. So I'm looking at the volume here on Friday. To me, in my opinion, this is an anomaly, because the spread of the candle is much smaller than the previous spread with decreasing volume, right? So Friday's volume was increasing, but the spread does not match that previous candle off of decreasing volume. So in my opinion here, if there's volume to the downside that picks up, you might actually come here to create a lower low. So to the downside, the next level I'd be looking at would be the 200 SMA, which is at 88.47, and then the lows here at 87.60. If you do lose that level here, you would create a lower low, and then maybe potentially down the line test target 1 to complete that type 1 reaction at 85.60. Below that, I have 82.51, and then obviously target 2 at 80.49. If we go over here to the weekly, you can tell this is also a bearish crab pattern here, where it, in this sense, it's creating higher highs and higher lows, and you could come down the line to test $84 and maybe 82 down the line. Right now you are finding support at the 50 EMA. It does tend to come down and test it, fall below it, and also reclaim it down low. As you can tell here, back in early March, it came down below the 50 EMA and then retraced back up, still hovered around below the 50 EMA, and finally make a higher high there. Came back to test here in early January, then making a higher high. So right now we'll see if this is actually going to be repetition again, but if it doesn't, the next level I'd be looking at here would be these targets to the downside. So in my opinion, I will see if that volume is going to pick up to the downside again, because that anomaly candle has me intrigued for potential downside if we do see more selling pressure. So definitely keep a close eye out on XLE. Jumping over to Apple here. So Apple had a very bullish week. It went as high as $218.95 on Monday, before it came with increase in selling pressure here at the end of Friday's close. So Friday you closed at 207.49, which looks to me like the highest amount of selling it has had in quite a while. We haven't seen that amount of selling since maybe all the way up here. Where was it? Since back in 2020. So that it's definitely very interesting to see what happened there. Obviously there was some bearish news with EU there and not implementing AI. So we're going to see here if Apple is actually going to retrace to see some of these levels here. There was a bearish shark pattern here, but this went way above hop, so this invalidated, but we can still look at these levels of support. So I do have a line here at 198. Should it come down and lose that 13 EMA, the next level I'd be looking at would be 201.57, and then that hop there as well. So it's kind of close to my target at 180.93. Obviously right now the RSI did lose You went below the RSI below 70, and right now the HSI, you did cross the midline, and it's looking like it's going for that oversold condition, and that could be around 198 below 200. If we go over to the weekly here, the weekly did have this dragon pattern. So this dragon pattern, as you could tell, it didn't come down to CD there. It actually found support, and it went on a wild run here all the way to as high as 2020. So it did retrace back up to OPR, and right now you are testing OPR to see if you find support there. If you don't, more down the line on the weekly time frame, I'd be looking at BC target at 194.52. Obviously losing that level, then you could see some downwards pressure to maybe test some of these levels here back up to the 180s, and then all the way down to 156.44. Right now it's very important to see what Apple's going to do here to see how far it's going to retrace. Maybe it does find some support here around 200 and then make a higher high down the line. But what's very interesting here, and that obviously could be due to the EU news it had, as well as OPEC. So, but it is definitely a huge amount of selling. It was 200, and obviously all of this wasn't all selling. There was buying and selling, but there was 246 million volume that it had on Friday. So it was definitely high. So it's going to be very important to see what it does here, because on the weekly, you obviously this closed on a shooting star, so by definition that is a reversal candle to the downside. Maybe it just cool off a bit as well. We still didn't trigger the HSI arrow on the weekly, but that could happen within this next week. And if last time we had that HSI arrow here, you did retrace down on Apple towards around 17%. So we'll see if that happens. Obviously it's not going to repeat the same scenario, but it's definitely intriguing to see what this candle is going to show moving forward. So definitely keep a close eye out on Apple. Jumping over to Microsoft here. So Microsoft's a bit bullish for this week. It almost attempted its previous all-time highs, but on Friday it closed on bullish volume here. It did close as 449.78. So what can we expect here for Microsoft? As I bring out my drawings, the next level I'd be looking at would be 457.26 if there is more continuation to the upside. That is taking the previous all-time high here back in late March here to the most recent lows. That target there is the 1618. If we go over to the weekly was off of increasing buying pressure. So the HSI bounced off the midline. The RSI is still not overextended, and the AMP RSI as well as the HSI are all looking like it wants to continue pushing higher. Above 457, I haven't drawn out that target yet, but I do think you're going to meet some resistance there. To the downside, if we're looking here on the daily, if you find some resistance here, the next level would be to test a 90 EMA there at 442, and then come back down if you lose that level to test OPR there at 433.87. Right where the 21 EMA is at. Losing that level, you can see 429.31, and then come back down to test the 50 SMA there around 419, 420. So because you could tell, Microsoft does come to test the 50 SMA. There was a point in time here in April where you actually lost that level, but managed to reclaim. So if data is bearish, I'd be looking at these targets to the downside, but if it's bullish, I'd be looking for a break above 450, and then you can see 457.26. So definitely keep a close eye out on Microsoft. Jumping over to Amazon here. So Amazon, very high volume buying on Friday. It did close as 188.08, just roughly here from the previous all-time highs. Looks like now it's at the triple top. We'll see if this is actually going to break out to the upside. So if you want to break out on Amazon, you definitely want to do it off of increase in volume, and that is exactly what it did on Friday. So what do we have to the upside here for Amazon? I haven't drawn a line, but we're going to draw some levels here. So we'll take the previous all-time high there, where it did go as high as 191 to the most recent swing lows. So the next target I'd be looking at here from that downtrend here would be to retrace to 189. Obviously you test 191.70, and then you can see the 1272 at 196. Above that, then you have that psychological level, and then the 1618 at 202.72. So right now the HSI did cross the midline, which is what you want to see. Because if it goes to these overbought conditions, you're definitely going to test potentially, if there's more volume pressure coming to the upside and data is bullish, you're going to see that target potentially be hit again around 191.70, and above that then you can see the psychological level at 200 plus. If we go over here to the weekly, we can see that there is some confluence there off the bearish shark pattern, where it is finding support above OB and is now looking like it wants to reclaim the terminal bar there at 189.77. If you're able to break above that, then you have that hop level there at 203.04. So right now, the weekly, that was an increase in buying pressure. So we're going to see if Amazon is finally going to break out of here, because it has had some resistance here a couple times, right? Back in early July 2021, when it did hit as high as 189 or 188, and then it had another attempt here in November, ultimately failed, and then you did have one again April, May, and now June. So if this is going to actually break out, then I would be looking at the potential 200 plus level on Amazon. If you are not able to reclaim the terminal bar there, then the next level I'd be looking at would be the 9 EMA there at 184, and then the 21 EMA basically where the 886 of the pattern is at 175.95. So below that you do have a gap fill around 174 and change, and then you have another gap fill here around where the 50 EMA is at on the weekly, around 159 and change. So definitely keep a close eye out on Amazon. Jumping over to Tesla here. So Tesla had a very bullish open at the start of the week. On Monday, it did almost go as 5% plus for the day. It went as high as 188, I believe. But then it did retrace back down to Thursday at 179.66 before closing on Friday at 183.01. So what can we expect here for Tesla? As I bring on my drawings, you did finally re-break above 177 here and is now finding support above it. So that's what you want to see for the bullish case scenario. The next thing I want to see Tesla is to actually finally break out of that 190 range. If we could break out of that 190, then we could start looking at the BC target there at 195, roughly where the 200 EMA is at around 196. A break above that, then you have CD there from the dragon pattern here, or the white swan I should say, and then you could see a gap fill there around where the OPR, just slightly above OPR there. The gap fill is around 26 and change. The 200 SMA would be right where OPR is at around 207.33. So right now, Tesla is finding some support here around the 170s, the high 170s, 180s. Hopefully it finds support there, because if it doesn't, then you're going to come and test 177. If you lose 177, in my opinion, you're back in this range you were in here during this whole time period here, where you were just trading anywhere between the mid 160s and all the way up to the 180s here. So losing this level to kind of come back down to test these levels again to the downside. So I'd be looking at 174, roughly where the 50 SMA is at now, and then you could see 168, and then maybe you could see these levels to the downside. But right now, Tesla is finding some support here now in the 180s potentially. So if it finds support here, I'd be looking to the upside here for Tesla. Off the weekly here, the weekly has this potential death cross approaching on the EMAs. The 50 and the 200 is right here. You can see the 200 EMA as a green and the 50 EMA as a blue. So if this crosses to the downside, that would create a death cross, obviously. But the EMAs, at least the 50 EMA, is starting to curl up. So we'll see if it actually can retrace above XA there. As you could tell, the 21 EMA has been resistance on the weekly off of this also bullish Gartley that we have. The 21 EMA resistance, and also this week resistance, you are not able to close above the 21 EMA. So if you're able to close that just roughly where the XA is at 183.81, I'd be looking at test 197, and then maybe that $200 psychological level. The HSI off the weekly indicates that it wants to go to these overbought conditions. So if this goes to the overbought conditions, that could be anywhere between where the 50 EMA is at and that $200 psychological level. Above that $200 psychological level, then maybe you could see that gap fill there around 206 and change, and then maybe you see the type 1 reaction of target 1 at 225.61 down the line. If you're not able to hold above XA here, you obviously have these targets here to look at, but more so when we're talking about harmonic targets, if you lose XA and you create a lower low here, then you could see hop there down the line at 145.61. But right now it's holding. We can't say that target's going to hit just yet. It is holding above in the at least 180s for right now. So definitely keep a close eye out on Tesla. Jumping over to Google here. So Google, just like Microsoft and a bunch of other tickers like Amazon as well, was another blue chip that had high increased volume pressure on the daily here on Friday to close the day here. It closed at 179.63. It did hit a new all-time high there on Friday at 180.85, but closed the day at 179.63. So what can we expect? No current harmonic target here. It's way above hop. So these these harmonic patterns have been invalidated as is, way above their potential reversal zone. So the next level I have is 193.70. So 193.70 is the 1.618 from taking the previous all-time high here is back in January 2022, the most recent swing lows here in October 22, and that 1618 is calling for 193.70. Above that, then you have psychological levels at around 200. So if we're looking at here the ABCD pattern on the weekly, you can see that it is above HOP for the second week in a row. So we have one more bullish week. This is off increase in volume as well. One more week above here that it hovers, and you could maybe down the line see that potential target to the upside, as it would be 3 weeks above HOP, which would be bullish. If you're able to find resistance here, the next level to the downside I would be looking at for Google is to lose 175.37. Below that, then you have the 90 EMA there at 172.40, and then you can see the ABCD target at 164.78. That's roughly just below where the 21 EMA is, just above the 21 EMA. Below that, then you obviously have that gap fill that it left from the earnings. So definitely keep a close eye on Google, as I do think Google has more strong upside here, just based off the amount of buying pressure that it's had on the daily. So definitely keep a close eye out on Google. Jumping over to Meta here. So Meta no currently harmonic targets or harmonic patterns on the macro time frames. So I'm just looking at here at volume to price analysis and what it says on the daily chart. So Meta has been having a hard time breaking and staying above the $500 range. It did try here June the 12th here, went as high as 514, but as you could tell, it came all the way down to the low there being there at 495. It did go as high and back again to 506, but ultimately got rejected, and on Friday closed at 494.78. And it did come down to test a 21 EMA off of increase in selling pressure. The HSI is reaching the overbought conditions almost, but that could be anywhere between where the 21 EMA is at and all the way down to the 50 SMA, which would also fill this gap here that it left here around 483. If you come down here and you find support above the 50, then that would put the HSI to the oversold conditions, in which case you would be looking for an HSI arrow back up off of increasing volume to suggest a reversal is incoming back to the upside, similar to what it has done in the past. Like over here, like the HSI arrow being in the oversold conditions, you get some volume to the upside and you create higher highs. So that could also be a case here where Meta may be heading down to finding support above the 50 and continuing pushing higher. If it fails the 50, then this can get quite interesting here, back down to 450, and then maybe you see it come down to test the 200 EMA around 417, roughly the entrance of the gap there. If you go over to the weekly, you can see that this was a shooting star off of increase in selling pressure. So I'd be looking at here off the weekly to see if it tests a 90 EMA there around 487, 486. Below that, then we do have that gap to fill. So as you could also see that the weekly 21 EMA has tended to find support here for Meta. So that weekly is at 465. So definitely keep a close eye out on Meta. Jumping over to Netflix here. So Netflix, I mentioned in my previous videos that it looked very bullish to potentially see an attempt to test the previous all-time highs are at $700.99. On Friday, it did close very bullish with increase in buying pressure there. It went as high as 686.90 before closing the day at 686.12. So what can we expect here? You did generate an HSI arrow on Thursday, but as you could tell, that is invalidating the potential reversal, as volume did increase on the daily here to the upside. So the next thing I'd be looking at here for Netflix is to retest $700.99. That was the previous all-time highs here back in 2021 before it had that major dump. So if you retrace above $700.99, which was the previous all-time high, the next level I'd be looking at more macro would be around $847.40. So that is taken by taking the Fibonacci tracing from the previous all-time high to the swing lows that it had in 2022, and that target is the 1618. So I believe it's a 1618. If not, it's a 1272. Let's just make sure real quick. Yeah, the 1272 at 847.40. The 1618 would put Netflix down the line at 1033. But I'm not saying that just yet. I'd be first looking at here for $700.99. Like I said, that weekly 1272 at 847.40 could take some time to play out. There's obviously other levels that we could retrace. You could actually use the daily here to see where this could actually retrace from the most recent swing high to swing lows. You could just use here the dragon pattern to also where the outpat is at, and that is calling next target 795. So there's looking like to be some bullish reaction here. If Netflix breaks above this, you could definitely see this go. Obviously we could also go more more micro here, closer time frame to a swing, most recent swing low and swing high here. You could take this one here to this point, and you can see 725 would be a next target around after the break above 701. So right now, in my opinion, NFLX looks like it wants to attempt to test that previous all-time high. You did have that HSI arrow trigger, and you did cool down the oscillators here. The RSI is a bit overbought right now in the RSI here, but it's looking like it wants to come maybe for a double top, and that could be roughly where that previous all-time high is at. So definitely keep a close eye out on NFLX. Jumping over to NVDA here. So NVIDIA had its biggest red day in a while there, went on Thursday to close below negative 3.54%, and then on Friday had more continuation to the downside where it closed at 126.57 off of increase in selling pressure. So what can we expect here on NVIDIA? No current harmonic target on the macro timeframes, so the next level I'd be looking at would be to retest to the downside. If it loses this level here, it's at 124.70, then I have a line there at 120.88. Below that, then you have the 21 EMA around 119, and then obviously losing that level, then you can come down to test the 50 EMA there, where there is a gap fill around 106 and change. If we go over to the weekly real quick, you did close off of increase in selling pressure with an HSI dot followed by an shooting star there. So if this is actually going to reverse, the next big level, like I said, would be to lose 120.88. Below that, then you obviously see the 9 EMA around 111, roughly where that other indecision candle was formed. So right now, it looks like you are getting some increase in selling pressure. So we're going to see if the 21 EMA holds for NVIDIA. That would be my next target to look at. Below that, obviously, it has come to test previously the 50 EMA, right? Usually when it comes and tests the 50 EMA is off of during this time period here where we had some bearish data. Obviously the market came down, it found support at the 50, and then it created new higher highs. So but prior to the data here that was released here, where NVIDIA did find support above the 21 EMA. So let's see if NVIDIA comes down to the 21 EMA here on 120, finds support, and then creates higher high. Obviously for this to be bullish again, it's still bullish in my opinion. It just retraced a little bit here. The macro time frame is extremely bullish. So if it manages to hold above the 9 EMA to the upside 128, the next level to the upside for more continuation to make higher highs would be 132.66 and then 144.71. So very important to see what NVIDIA is going to do here moving forward. So definitely keep a close eye out on NVIDIA. Last but not least, jumping over here to Bitcoin. So I mentioned in my previous videos, and I mentioned to the Discord here, that Bitcoin started to look a little bit more bearish as the volume pressure to the downside started to increase here. So it was not able to hold above target 1 here at 66K and ultimately failed that with increase in pressure. There was literally no buying pressure here, and it is now at 63,730 as of this video. So the next level I'd be looking at would be to complete the type 1 reaction all the way to target 2 at 62.4K. If you're not able to hold support here, the next level I'd be looking at would be from the previous dragon pattern target there at CD from the 1272, which is calling for 57.7K, roughly close to where the 200 EMA and SMA is at. If we go over to the weekly, we can see here that is now losing the 13 EMA. It has come down to lose a 13 EMA and has all the way come down to test a 21 EMA, so that's the next level off the weekly I'd be looking at, and that's roughly around 61K. As you could tell, the HSI did get rejected off that midline, and it could be coming down for the oversold conditions, which could be anywhere between the 21 EMA all the way out to the 50, so that could be around 51K. I'm not sure, and I'm not calling for that target below 60K just yet, until we see at least a break below target 2 at 62.4K, harmonically speaking. And the reason why I say that is because on the daily, even though the RSI is approaching these overbought conditions, it still has some room to the downside, and that could be towards that target 2, the completion of target 2. If it finally finds support above here, the HSI is completely oversold. That does not mean it cannot go down to the extreme conditions right here, which I could see that going down to where a target 2, that would put that in the extreme oversold condition. And if you find support there and you get volume come back up to the buy side, you could potentially see an HSI arrow trigger there, meaning a reversal is incoming, right? And if the reversal is incoming and it finds support at that target 2 and you get that HSI arrow and volume to the upside, then maybe down the line you could see a type 2 return back up to hop. So you have to see it obviously retrace target 1 at 66K, then XA at 70.9, and then 75k to finish that type 2 return. Obviously we're not there yet, so we have to play day by day to see where this is actually going to hold support, if it is going to find support. So definitely keep a close eye out on Bitcoin. Alright guys, so that's basically all I have for you guys. So I will be streaming same time as always, so if you're interested in catching me stream live, I always stream Monday to Friday from market open to market close. So if you want to catch me there, link to my Twitch is in the description box below. Having said that, I hope you guys have a good rest of your Sunday, and I will see you guys bright and early. Take care, everybody, and peace.